The SEC has announced a significant shift in its regulatory approach to cryptocurrency, releasing a podcast outlining its priorities for 2026. This development could reshape the landscape for crypto investors and the industry itself. Here's everything you need to know about this unfolding story. Looking ahead, the SEC's recent podcast series is poised to significantly influence ongoing discussions surrounding cryptocurrency regulation. The SEC, which has been under pressure to clarify its stance on digital assets, aims to provide guidance that could reshape the industry. One potential scenario is that increased clarity from the SEC leads to heightened compliance within the cryptocurrency sector. This could stabilize market dynamics and attract institutional investors who have been cautious due to regulatory uncertainty. Alternatively, if the SEC's regulations are viewed as overly restrictive, it could drive innovation and investment overseas, particularly to jurisdictions with more favorable regulatory environments like Singapore or Switzerland. Such a shift could result in a talent drain from the U.S. and stifle domestic innovation. Experts predict that the podcast may also serve as a vital platform for future updates on regulatory developments, ensuring that the industry remains engaged and informed. In the coming days, it will be crucial to monitor responses from crypto stakeholders, including exchanges and investors, as they digest the SEC's messages. These stakeholders are likely to voice their concerns or support, shaping the narrative around regulation. The key question remains: how will the SEC's renewed focus on regulation impact the future of cryptocurrency in the United States? The outcome of this regulatory push could redefine the landscape of digital assets, influencing everything from investor confidence to technological advancements. As the SEC continues to navigate this complex terrain, the industry must prepare for a range of scenarios that could emerge. The next few months will be critical in determining whether the U.S. can maintain its position as a leader in the cryptocurrency space, or if it risks ceding that ground to other nations more amenable to innovation. The SEC's focus on cryptocurrencies has evolved significantly over the past few years. Initially, in 2020, the agency adopted a cautious approach, issuing warnings and guidance, but lacking a comprehensive strategy to address the complexities of this emerging asset class. The rapid growth of cryptocurrencies and their increasing integration into mainstream finance prompted a reevaluation of its stance. High-profile incidents, such as the collapse of major exchanges like FTX and numerous fraudulent initial coin offerings, ICOs, underscored the urgent need for regulatory oversight to protect investors and maintain market integrity. In 2021, the SEC began to intensify its actions, targeting unregistered securities and launching investigations into various crypto projects, which highlighted the vulnerabilities within the industry. The introduction of the Clarity Act, aimed at establishing clear guidelines for digital assets, marked a pivotal moment in the legislative landscape, signaling a recognition of the necessity for a structured framework. However, delays in Congress have highlighted the challenges of achieving bipartisan consensus on crypto regulation, leaving many stakeholders in uncertainty about the future. As the regulatory landscape remains fragmented, the SEC's decision to launch a podcast reflects an acknowledgement of the importance of engaging with the public and industry stakeholders. This proactive communication strategy aims to demystify regulatory processes and foster cooperation within the crypto ecosystem. The impact of these developments is profound, as clearer regulations could enhance investor confidence and promote innovation in the sector. Looking ahead, with ongoing discussions in Congress and increasing public interest in cryptocurrencies, the SEC's actions will likely shape the future of digital asset regulation. The agency's commitment to transparency and dialogue may lay the groundwork for a more robust framework that balances innovation with consumer protection in the rapidly evolving cryptocurrency landscape, setting the stage for sustainable growth. The recent announcement by the Securities and Exchange Commission, or SEC, has profound implications for the cryptocurrency market. The SEC has launched a podcast aimed at clarifying its expectations regarding compliance for digital asset firms. As regulators increasingly scrutinize digital assets, investors are closely monitoring these developments, as they can significantly influence market stability and overall confidence. This newfound clarity is essential for fostering a more secure environment for investors, many of whom have remained cautious due to past uncertainties surrounding regulatory frameworks. The cryptocurrency market, which has experienced explosive growth, now stands at approximately $2.5 trillion. This substantial market capitalization means that any new regulations could have far-reaching effects, impacting not just institutional investors, but also everyday individuals who may hold cryptocurrencies. In recent years, the industry has faced significant challenges, including market volatility and high-profile fraud cases that have raised alarms among potential investors. The collapse of major exchanges and the rise of Ponzi schemes have highlighted the urgent need for regulatory oversight. The SEC's podcast emphasizes the importance of investor protection, particularly in light of these troubling incidents. By providing clear guidelines, the SEC is signaling its commitment to safeguarding investors and enhancing the integrity of the market. Furthermore, the SEC's proactive stance may encourage greater institutional adoption of cryptocurrencies. Large firms often seek clear regulatory guidance before entering new markets, and a well-defined framework could facilitate this process. The potential for increased institutional investment could lead to a more robust market, ultimately benefiting all stakeholders involved. As we assess the broader implications of these regulatory changes, it becomes clear that the average person should take notice. The SEC's commitment to establishing a clear regulatory framework is not just a bureaucratic exercise. It could directly affect the value of cryptocurrencies that individuals may already own or are considering for future investment. In a landscape where trust is paramount, regulatory clarity could pave the way for a more stable and mature crypto market. Looking ahead, the SEC's efforts may not only enhance compliance and investor protection, but also transform the cryptocurrency space into a more legitimate and widely accepted financial ecosystem, fostering increased consumer confidence and participation in the digital economy. On May 13, 2026, the U.S. Securities and Exchange Commission, known as the SEC, launched a new podcast series titled Crypto Focus. This initiative aims to communicate the agency's regulatory priorities concerning cryptocurrencies and digital assets. The first episode, released at 10 a.m. ET, features SEC Chair Gary Gensler discussing the importance of investor protection and the need for a comprehensive regulatory framework for the crypto market. Gensler emphasized that the SEC is committed to fostering innovation while ensuring that the market operates within legal boundaries. This announcement comes amidst increasing scrutiny of the cryptocurrency sector, particularly following a series of high-profile incidents that raised regulatory concerns. For instance, the collapse of major crypto exchanges and the rise of fraudulent schemes have underscored the urgent need for oversight. Notably, the SEC's proactive stance contrasts with previous years when regulatory actions were often reactive, responding only after crises arose. The podcast format serves as a modern outreach tool, aiming to engage a broader audience, including investors, developers, and the general public. This shift towards a more transparent communication style marks a significant evolution in the SEC's approach to regulation. The launch is unprecedented in the agency's history, highlighting its recognition of the growing influence of cryptocurrencies in the financial market and the necessity for clear guidelines to protect investors. The announcement has generated considerable buzz within the crypto community, with many viewing it as a pivotal moment for regulatory clarity. Industry stakeholders are optimistic that this initiative could lead to a more stable environment for digital asset investments. Investors are increasingly seeking guidance as they navigate the complexities of this burgeoning market. The SEC's initiative may also encourage innovation by providing a clearer regulatory framework, enabling companies to explore new opportunities without fear of non-compliance. As the podcast series unfolds, it is expected to demystify regulatory processes and empower participants in the cryptocurrency ecosystem. Looking ahead, the SEC's commitment to engaging with the crypto community through Crypto Focus could reshape the landscape of cryptocurrency regulation in the United States, potentially setting a precedent for other regulatory bodies worldwide. As the SEC's focus on cryptocurrency regulation evolves, what will be the long-term impact on the industry? Share your predictions in the comments below, and don't forget to subscribe for daily deep dives into the world of finance.